It's the weekly 30/30 trading list on the ASX. We're looking at two lists here. The first are the top 30 companies with the strongest quarterly momentum. The next is where we look to find the next market leaders, the top 30 companies on the launchpad, where they've had the greatest improvement in their momentum over the last week. I'm Christopher Hall, this is Final Market Points, and we say good morning to Gary Glover. How are you, Gary?
Yeah, I'm good, Chris.
We've got the lists. We've been doing this for quite some time. We start off with the strongest momentum shares, and I'm having a look at the chart that you've got on screen here with us, and that's a massive move. So what are we looking at there?
Yeah, that's number one there. Probably not too much to sort of say in terms of opportunities there. I think Impedimed IPD, this is actually one that came up, I think this actually might have been on the, I think this was actually on our, I'm not sure it was on this first list or second list here, but yeah, it's definitely popped up here.
It's not the first time we've seen it.
Yeah, no, it would have popped in here into the weekly list there on that move, and then it's obviously pulled back here, and then she's gone there. I think we actually spoke about this actually last week here from memory.
You were talking about high and tight flags last week and consolidations up towards the top end of the range.
Yeah. Well, the interesting thing here is sometimes you get these spikes there, it can be quite meaningless, and then don't really give you opportunities there. So what you're looking for is a little bit of a pause there. Looking for volume to dry up there. So I saw volume dry up a little bit there. Probably nothing too obvious there. Started have a little rally there, and then pull back the 1-2 days, and you can just see in there. At that point there, you could see selling had dried up here, and then started to move up a little bit of volume there. Probably not giving it away here, but okay, this could potentially could go on with it here, and then for me, breaking above the last high is always a good sign as well. So yeah, so it has kicked on there. So
just on that one for a second, which high are you talking about? The one that it made after it broke out and then gapped up significantly, or that minor high that it made in the pullback?
Yeah, probably for safety's sakes, probably going to a new high here, probably be what you want to see there. But yeah, you might have been sort of seeing here, some volume coming in there. So if you occasionally, it's like your rules there is sort of like, this is what, you're looking for the break here. Occasionally I might, you might do a little cheat if the signals are sort of good, it starts to build here. I would never do a full position there. I might only put a small position on, and if it turned against me straight away, I'd be straight out. But yeah, look, you could use that as a little minor high there, but I'd be wanting to see a good up day and good volume there, which you sort of started to see there. But yeah, that's just still tricky to trade there. You're looking for, the better ones are when you look for, when you see a bit more of a consolidation there and a breather. Yeah, so this one here, I'll just sort of coded this one here just because it's sort of having a bit of a breather now, Chris, but so far, not too much volume in there. So that's what you want to see. You want to sort of see a bit of a consolidation there and not too much volume coming there. So this is sort of one just to keep an eye on here, sort of add to our watch list there. Again, good volume there off that break there. We're looking for a bit of a consolidation and looking for a safe entry there. Here's sort of one a while ago there. I guess you've got your little VCP in that ALA. Consolidation there, tightens up, consolidation, and then starts to punch through. Yeah, and then you get a bit of a break here. So you just never know. Sometimes these charts here, you look like you're here on the chart. They'll look pretty extended like the first or second charts here, and then they can just really keep going here. So that's why it's sort of more important to sort of drill into your profile there, particularly volume there. So look, lots of people use lots of different indicators there, Chris, hundreds of indicators there, but price and volume, you really can't go past those two there. If you understand price and volume.
90% of the way, is it?
Yeah, that is 90% of it there. I mean, if you study any sort of Wyckoff there, it really just sort of drills into those sort of two elements there. All the rest is sort of smoke and mirrors. So I'm being completely honest there. There's some good indicators there, but every indicator is probably good for one thing, not good for everything. So, whereas volume can sort of tell you a lot about what's happening in the market there. This ODA is sort of one that was on the number 6 on the list. Look, it's probably a little thin there, but did have a little bit of a pause there and then break through the top there. A bit hard to trade. I think the LIN was sort of one that we did speak about previously as a cracking VCP. First pullback, second pullback, tightening up, and then a pop here. So that's that's what we're looking for. So we can identify those things there. Those are the good ones there, and even sort of like the TLX as well. Seeing sort of stocks that are sort of consolidating, under the high here, and eventually sort of break out through. So you've gone up to retest the high, have a bit of a breather, starting to edge up in this. I can tell you there are plenty of stocks at the moment that are setting up like this, that are in this sort of phase here. I might show a few of them later on, but there's plenty looking like that. So we just need to sort of show, need to wait for them to sort of show their hand, and then sort of follow there. TSO is sort of one that's again a small one, jumped out of the range. So you'd probably wanted to put it on your watch list. EQR, nice little VCP in here previously. Probably a little small for me. I probably wouldn't have traded that, but we saw, the key there is to see good volume run up there, volume decline there in the dry up, and then start to see a few, some of those up days, see the volume start to come in, and then you sort of see you pop out of the range there on good volume. That's usually when they follow through. So the other one I thought really, actually, this one did catch my eye actually, was MEI. I think we might have had it on the list there a couple of weeks ago. Pretty cracking run here. Good volume all the way up here. Had a bit of a three-wave pullback, had a bit of a breather, come back and sort of retested the high again, sort of consolidated there. So you sort of got your VCP characteristics there. So I was sort of thinking maybe it comes back under here, consolidates under the low, then you get your VCP, but looks like it has sort of closed above our high here. So this is a good sign here that we've sort of cracked above here.
And the volume
and
signature?
The volume's not, volume's not bad. So you've got sort of throughout this whole period there, no volume through here. So this is the best volume we've seen here on this leg here on the break here. So yeah, that's not a bad sign. It's probably a small stock, probably a tough one to trade there, but for all intents and purposes, there's nothing wrong with it. That's if you go back and look at a lot of the ones that have run, they look a lot like that. So it looks pretty healthy there. EML was sort of one that actually looks pretty interesting here. Actually, it's almost like a bit of a cup and handle here. It's just you've also got this little consolidation going on here. Very tight here, very light volume here so far. So I'm not a fan of the stock here, but the share price action is, I think it was a false break of the low, which I love. It's had a bit of a rally. It's got taken out the high now, but there was some okay volume through here. Some decent days up here.
And then consolidating just under that high, right?
Yeah, so the volume, so it's not really selling off here. So normally I would have thought a stock like this would have gone straight up here, and then all of a sudden we'd draw all the sellers out, and then we would be seeing, the old pump and dump. But we are not seeing anyone selling or dumping the share here. So that is a good sign. That's actually very constructive. So looks okay. IVR is another one that was sort of on the list, pretty small, had a pretty decent move, some pretty good volume there. Just having a bit of a pause at the moment there. Volume sort of drying up here. Probably just needs to use up a bit more time. But watching that just for a bit more of a, prefer to see it more drawn out there. A little bit of a cup and handle in here, Chris, a little, and then a breakout on this day here. And then it has sort of gone on there. So it's hard to, sort of my instincts from a couple of years ago, I wouldn't touch sort of stocks that look like this up near the high. I'd be afraid to touch them, but these are the ones that sort of running through here. It's funny how recently I've been looking at I've been going through the new highs and the new low list, and then I started looking for the new lows, and every day the same stocks are on the new low list. They're just going lower and lower and lower. And I thought, what am I looking at this for? I'm looking for a few maybe false breaks or something, but 95% of those stocks are just continue down. And so it's the same essence for the stocks that are going up. They continue to go higher and higher and higher and higher. So it's a whole, just sort of clarifies, what you've sort of got here with your system there as you've built, is that, we really want to be looking at the stronger stocks, looking for these consolidations and going with the break and then running with them, and they can be new high each day. So that's the easy side of the market there. Sort of it's human nature to go looking for stocks on the cheap or stocks getting lower and lower, but we know that's fraught with danger there. And if you just do yourself a favor, go and look at the new lows every week or every day, and look at them over and over again over a week or two, and like 90% of them will just be the same ones that were on the previous day. So they just continue to keep going lower and lower and lower. So
we know statistically, if you break the market into thirds, and you go the top third of industries, the middle third, and the bottom third, the leaders lead, and those themes will stay in that top third for an average of 9 months. But the laggards, those bottom themes that are ranked in the bottom third of the market, on average, they stay down there for 18 months. So it's kind of those names that are showing up day after day, week after week. It's they can be there for month after month, which is not really where you want to be deploying your capital.
Yeah, a long time ago, Chris, I worked for the ASX, and they used to have like the monthly summary used to sort of get released, and sort of like be trading volumes and then what companies were listed for the month and what companies were delisted. I was sort of horrified. There's like 20 to 30 delistings every month. I thought, what? There's 20 companies going out the back door every single month on this exchange, So, so you don't often hear about them. You just sort of see them, trade themselves away down to
oblivion.
to a low sort of market cap, and they either get, recapitalized, renamed, and taken up by something, for a shell, and then reincarnated, or they go out the back door. But I was just at the time there, I was literally seeing this sort of 20 to 30 names every month on this sort of summary delisting. And I sort of thought, wow, okay, that's that tells you a lot about the marketplace, and that's sort of why we've just got to stick with the strongest here. It's very obvious there. GDC, there's a nice little VCP there. I included this one, Chris, because sometimes our VCPs, they don't sit under the high. You can see here, this one's had a pullback, gone slightly to a new high, but then pulled back again, pretty tight. And then it's gone again to a slight new high, and then it had a little pullback and then popped again. So sometimes the VCPs, they don't always sit under. They can go slightly high. So this is not the most common setup, but it is a setup that can occur there. So it's harder. You've probably seen that one big volume profile day there, and maybe this sort of pop day here, if you're smart enough to sort of see it popping through. Sometimes the best way to trade these, if you see this sort of VCP in there, and this is sort of something I do occasionally, probably not enough of, is that you can program, because sometimes by the time it's popped here and gone through, it might be at up at 140, you think, I've missed my window. You can program, like a lot of the platforms now, you can sort of say, look, that was a high there at 133. You can program a buy and say, look, if this stock trades over 133, please buy it up to a limit of say 135, 136. So just put something within reason so you don't overpay for it. But if it pops above that, then you get filled within a cent or two of it, and then away you go. Then you're not having to sort of micro manage everything there. So that's sort of one little tip there for people who can't be around watching everything there. You can once you've been filled there, you get your notice, then just put your stop in there. But the other one on the list here was Pointsbet. So did sort of say there, it's a bit of a change in character there, probably 2 or 3 weeks ago. Pretty decent move there. Pretty decent volume sort of coming through here. Has sort of broken a swing high too, actually probably broken 2 here now, which I think is decent there. So it's a big move here today. It's obviously gapped up on some pretty good news, and then profit taking sort of drawn in here. But this will be one to keep an eye on here now. Just might be a bit of a change in character in this one. But yeah, still might need a little bit of base building here. Still a lot of tortured souls sort of who bought this a lot higher here. So there'll be some headwinds along the way. But the fact that you've actually broken 1 or 2 little swing highs, I think that actually is constructive. So regardless of this bearish move here today on big volume, this could probably come back down and start building here. So definitely one to sort of be keeping an eye on there, moving forward there. Last one there, was DUR. Just thought, this stock here, there's a classic, each day, probably every second day it's on the new high list. So that's what we're looking for is the stocks. Yeah, so a bit boring there, but geez, it's nice to see your money tick higher every second day. So definitely get used to that. Only other one there was EBR, which I thought was a little, again, just another one of those VCPs where it's a bit upward sloping as well. So getting smaller, popping through as well. So they don't always sort of stay underneath the high there. They can go slightly higher. So don't just rule it out because it's gone to a new high and pull back. But yeah, we definitely saw that, all that volume sort of come in there and kick on there. So yeah, pretty interesting there. Now the weekly list, number one on here is a little bit heartbreaking for me because I was watching this really closely, Chris, and I just had my plate was full. I didn't really have any room for it at the time. I think I mentioned this one here about the 0, 1, 2, 3 pattern.
Yeah.
Had a series of high lows building here, so very constructive. Sort of got that low, high, low, second high low, third high low. So just building a sequence there of high lows, and the beauty of this sort of the 0, 1, 2, 3 pattern is that, okay, there's our last low. So there's that we don't want to see that be broken. So that's what 331. So I'm starting to sort of see this sort of turn here. I think this would have been the first up day here. So 350, 360. So, to be buying at say 350 with a stop at, 329, you're only risking 25 cents or something like 20 cents, something like that. Whereas, the risk reward as it goes up to the top of the range again is, what's that, $1, maybe $1.50, $1.80. So, 20 to make $1.60 is 8 to 1 risk reward. I mean, geez, those are trades that I'd take every day, So, but yeah, I just had too much on. I just couldn't get this one on here. But well, that's the beauty of this sort of basing pattern. That's why sometimes it takes a bit of time here. Some of these sort of stocks here we're highlighting there, they've had a bit of a pop. They can come all the way back here. So that Pointsbet has had a pretty decent pop here. It might come back. It might come back 3/4 of the range here after this dramatic sell-off here, but then it starts building again. So it can take a little while to build here, some of these patterns. So yeah, got to be patient in the market there. Just got to be sort of signals that you're sort of watching there, looking out there. So yeah, just thought that was pretty interesting. That looks pretty good. Good volume there, buyback announced. So yeah, it looks pretty constructive.
On that one, actually, while you're on Pointsbet, that's had an explosive movement in the last 3 or 4 days. If you were long that, sorry, not Pointsbet, Kogan. If you were able to get, Kogan, if you were able to get long on your portfolio, how would you be running a stop with such an explosive movement and large volume on those wide range days?
Well, you might sort of, so depends on your rules and stuff there. So me personally, if I was able to scale into this, Chris, if I managed to sort of get myself up to say 10 or 20% position size, which means I sort of, might have bought a little bit here and then added to it on a bit of confirmation. And then once I started seeing it going, I might have got a heavier load on. If I was able to get a pretty decent there, if I saw a wide range like that, I might,
start scaling
I might take
out.
a little bit. Yeah, I might take a little bit of it off. Not too much off there. Might only take a quarter off there because that still looks pretty good. So, I mean, this is sort of building high lows, high lows. So it should be sort of going to a new high here. So it should be taking this high out, potentially probably this high as well. So my target would be up around this sort of, 470 to sort of, $5 level is sort of what you're looking for, potentially even a bit more. So, take a little bit off here maybe after a big move down, hoping you get a little, little flag. Maybe you get a little, I don't know, like a little consolidation here for 4 or 5 days and then it pops again. But it don't always come here. So, but if we do get a big move, like you do get a big 3 or 4 day powerful move there, I think you've got to, it's worthy just to take a little bit off there. It's just that's my mantra is to do that a little bit, just because then you're like, oh, I've got, I'm up so much, and you can see them pop, you can see them come straight back. Like I think I saw this one here, Jumbo basically had a cracking. I got positioned on this, had a cracking move, and it's come all the way back here. I thought, oh, this thing's capable of moving big. I didn't really get my full position on. I only sort of had like a half position, but I ran a stop on it and got stopped out, I think, on the pullback there. I usually like, give it a couple of days sort of, so I don't like to sort of see it break, 2 days on the daily. I mean, sometimes when you're trending really strongly, that they don't break a swing low on 1 day, and then there's a 1 day break there. But 2 days just gives us a bit more room. So, I got stopped out on some of that. But, part of me thinks, I should have been trading. If I had a big position on, I would have definitely traded some into some of that heat there. But it's, you just got to, have your process and you got to have your style, and you just got to stick to it. So sometimes you sort of, you get into a trade and you scale up, and then it runs, for you nicely. And then all of a sudden some news comes out. It can be could be even good news. And then it throws all your plans out. You think, oh no, this is going to go a lot higher. So you can't throw your plans out. You've just got to stick to your method. Got to take a bit of profit off there to get off the top there. So those sort of things there, all the noise there will try and take you away from your process. So you got to sort of stick to the process there. If you followed your plan, this is the beauty of sort of trying to do a review. I sort of, I'm not the best at this, but definitely doing the reviewing process, sort of like try and at least sort of once a month sort of go back and review some of your trades, or if you can review all your trades and just sort of see what you did in those moves. That can be quite revealing, and sort of, it just picks a few things up for you. I sort of know in the past when I've reviewed trades, I've just seen, why would I'm taking it off too early, or I'm not hanging on too long, or you might just you'll pick something up from your review that will just, and if it's a personality trait, then you can build rules in to negate that personality trait. If it's just sort of something that you've identified, then you can just sort of tweak that a little bit, and just, so might just be something comes to light and you go, gee, the last 10 trades here, if I'd hung on that extra day, or if I cut quarter of the move into that heat, I would have been so much better off. It's just, that's why the review is so important there, to just go and review your style there. Stick to your process, as they say. Others on the shortlist was also Fleetwood's had a bit of a pop here. Just a bit of a wait and see here. See if it consolidates there. BMT is a tiny little VCP in there. Just sort of popped out there, sitting top above the 50. Probably a little lightly traded there, but the volumes are not bad. The volume off that first low was pretty good. And we've seen a few decent volume bars here in the last couple of weeks as well. So that's not the worst looking chart there. DUV, a little bit of a VCP in there, but the only thing that worries me here, the volume sort of come in late, sort of after the pop here. But yeah, it is a big three-way pullback, high low. Maybe we can build here, but probably not the best one there. What have we got there? SYM. Symbio there, sort of a bit of a corrective decline there, and it has sort of popped through here. So just taking a long time to get here, Chris. That's the only negative for me. Sort of sometimes when it's almost like a corrective rally in a way. So I prefer to sort of see them get going, and then once if I take out the high pretty quickly, then I'm more likely to follow that than something which taken a long time to get there. One surprise me here was actually Whitehaven there. It's possibly a little VCP in there. The volume's a little bit, a bit mixed there. There wasn't much volume through yesterday, even a little volume today here. So I haven't seen follow through there. So that probably makes it a little bit less attractive for me, seeing a bit of a pullback there, having a bit of a rally here. Maybe the volume is a little heavy, but the volume hasn't come again. So maybe it's going to have a bit more of a breather, dry up again. But I'll be probably watching that pretty close. WA1. Oh, sorry, not WA. VVA. That's all tightening up there. Possibly one to keep an eye on. I know it's Tyro as well. Potential VCP on that as well at the moment. Sort of pullback, higher low, flattening out here. Volumes are dried up here. So again, interesting EML and Tyro, probably stocks that I don't love. Price action kind of constructive here. So yeah, pretty interesting there. I think I mentioned that. I think I accidentally put that bit at WA1 there. There's also a VCP in there as well, Chris. So it's, pull back there, pull back in here. Nice. I love this sort of tightening up here. I think I mentioned Appen there last week, how like those, we had, heavy selling, and then finally it's popped up here, and then it's gone sideways for like there's 5 or 6 days, and there's just no selling there. You can just see the volume disappear. That's the beauty of, I was kind of Wyckoff and just looking at price and volume, is that for 4 or 5 days here, you just started to go down. And now we're starting to pop out here. So we've broken above this high. I think that's 310. So I might have gone above that again today, 320. So the volume's improved the last few days after having no like dead volume through here. So
Tight range,
kind of
dead
building.
volume.
Yeah. So it's building here. So I think I got sort of stopped out of sort of some of this on a bit of a pullback here, and then sort of come back here again. I'm never afraid to sort of go back in the stocks that kick me out, because usually they're sort of, maybe they're just trying to trap you, or trying to shake you out, as you often do. I usually keep pretty tight stops, so I'm used to losing a lot, but I'm used to losing small. That's the key. When if I get the move here and it takes off here, then I'm going to win big. That's my mantra. That should be. Yeah.
When you say losing a lot, you mean a lot of trades. You'll lose small, but when you win, you win big.
Yeah, that's right. Yeah. So there's been a few trades in there, sort of that I've been stopped out on. I just like to keep my wrist nice and tight. I don't mind getting out of trades there. So I think I've been stopped out on. I think I got stopped out on quite a few trades here this week here, but all pretty tight. I think I mentioned last week there, sort of like, I think one of my biggest winners there paid for probably around about 8 of my losers. So that's the way it's got to be. Hopefully when the market opens up, you get more winners. That's when you really have the P&L really moves. So just got to manage the capital. It's a pretty tricky environment there. Actually, I saw a lot of the momentum guys in the States there. I mean, some of the market leaders that were on everyone's list. Again, probably the relative sort of strength performers they're popping out there. I think Crocs was actually what's the code for Crocs? I can't remember what the Crocs. There we go. So it's sort of like again tightening up here, popped out of the range, had a bit of a run, and then crunch. So that is happening a lot in the US. A lot of the leading stocks here, so they're sort of running and then they're getting crunched here. So still a little bit,
kind of goes through a few stops pretty quickly there.
Yes, So that's the sort of trap here. Sort of everyone's playing the same game. You can get crunched here. So you sort of got to get in. Sometimes you get that's why. There's little pivot points we're looking for, so a little proof there, just, add into it sort of slowly. You've got to take a little bit off here because, if you did make, if you're able to take a quarter off here or a third off here, and then you get crunched here, and if you got in sort of down here, then you still go home a winner. You just don't go home a big winner. So important to sort of manage your trades and stuff there. But yeah, just, I mean, there's so many stocks here, Chris, at the moment that are tightening up here. So like that sort of, look at that. Look how tight that is. 88. That's tight. ALU. Look how tight that is. That's tight as well. It's sort of 360. That whole thing's been tightening up here for ages. It's sort of just can't get going there. The Appen obviously has just been tightening as well. But there's so many stocks here that are sort of going through this little tightening process at the moment here. So you just got to wait patiently. Because I mean, you don't know. There could be like Dicker Data looked like it was tightening up and going to break up here, but it's broken actually down here. So you can end up on the downside here. So just got to wait for the stocks to show their hand and then sort of try and go with them. So, but yeah, look, still pretty tricky there. Just important to manage your risk. That's the That's the key there. Just yeah, it's okay. So I always say it's what was that phrase there a couple of weeks ago? It's something. It's a you know, there's no shame in losing. It's a shame in, you know, or no shame in basically, you know, having a loss. It's a shame to sort of stay, you know, in a losing position. That's the shame, you know. So yeah, so you just got to manage your capital. You got to protect your capital. So like, you know, got to live to fight. I mean, the beauty of the share market is it's going to open next day and give it, you know, it's all start again and then opportunity. So you just got to be, you know, don't go hunting for sort of second tier trades as well. Sort of have your process, have your little playbook. By mean playbook, basically, what's your, you know, what's your sort of edge, what's your patterns you're looking for, what, you know, what's, you know, you just got to have your process. You just got to follow it. You just got to stick to it. Try and identify your sort of, you know, your A and your B setups there, and you'll find it. You know, if you go through a really good run, you'll be generally be trading A setups, and then as you get maybe a little bit overconfident, you start to sort of take other trades because you're just seeing everything. You know, you're in a flow state, so you're just taking everything that's coming, and then you start filtering down to some B sort of, you know, B and C type setups there, and then you eventually sort of you're losing your standards, and then you start losing a bit, and then you realize, oh, geez, I'm not taking good trades if you review them properly, and then after a bit of a losing run, you go back and you tighten up again. You sort of get, you know, you go back over your process. You read your notes, you read your rules. Here's my playbook. I'm just going to trade this, you know, the top ones again. So you go through that motions again, and then all you're looking for is the best ones, and then you're set on the process, and then it kind of redefines you back into tightening that process again, and then you go again, and then over time that, you know, you start to get some winners, and then you know, get a few more, and then it builds, and then you start to loosen up again, and then you start taking some B's and C's, and then
it sounds like a trader's cycle. It's just
definitely a little cycle there. So you sort of just have to sort of try and create rules, elements, habits, you know, sort of James Clear atomic habits there to sort of try and keep you on the right path there. It's human nature to, you know, to be steered away. So, you know, if you read a lot about you know, human biases and human motions and stuff, there's just so many things taking us away. It's actually that's why psychology is so important. There's not so much that you're sort of reading the right psychology. The psychology is so important to recognize that as a human being, we're going to steer ourselves in the wrong direction constantly, and a human nature is going to go against our trading as well. So we sort of have to, you know, if you can recognize that your emotions are going to take you the wrong way, and you're going to feel compelled to do the wrong thing at the wrong time. Once you understand that you're working against yourself, then you can sort of create some rules and some process there to sort of eliminate that. You know, if you can take the emotions out of trading, be emotionless or emotion free, that's how you sort of get better. So it's a lifelong study. It's, you know, you're really studying yourself, which can be quite revealing too. If you don't like yourself, you'll be left sort of hanging there. So you really have to sort of improve yourself. And that's why traders sort of, you know, they do focus on other things in their lives as well. Sort of, you know, about, you know, trying to stay healthy, trying to, like, be mentally strong, just doing lots of different things to sort of try and build your mental strength, your physical strength, and your health, just so that you can perform better as well. So, yeah, as human beings, we're so flawed. That's we just have to sort of try and work around ourselves and stop us from tripping over ourselves every day.
Well, they're very good trading insights for the trader psychology and the circle of performance, and sticking to our rules, having to review our rules, improve them, and then redefine them and come back again stronger. So they're really good trading insights. I think that's probably rounded out the list for the launchpad for the week, has it?
That's us. Yeah, I might. Been a few requests to sort of cover the sell in May and go away for the weekly report. So I might put an element of that in the next report, Chris.
Well, there we go. There's a teaser for next Tuesday. And to that point, Gary alludes to his Tuesday report that we do cover each Tuesday. You can subscribe on YouTube to get those updates where we do walk through his report and discuss those. And then obviously this Friday video where we're looking at the 30-30 list, 30 momentum shares, launchpad stocks, and Gary's pulled out the favourite charts. So thank you, Gary Glover from Novus Capital.
Thanks, Chris.